Coming up in this show, I'm going to bring you my opening comments on the markets. Ari has a sample for you of Future Speak, and he's going to follow up on Bitcoin. Katie is sharing trade planning with options. She combines option strategies with the askSlim methodology. This is unbelievable. And you're going to get our special premium services preview only for 1 weekend more. You don't need a credit card, but then we're following it up with an amazing new special, which is if you buy 2 months of level 2 or level 3, we're going to give you a free month after that. So make sure you look at the details on that. And then I'm going to bring you my analysis on the stock markets. We'll look at the 1 to 3 month view, looking at the European market, FEZ, the Dow Jones Industrials and Transportation Average, and the S&P 500.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market's upward surge turned into a buying panic last week as investors anticipated and then rejoiced the Fed's pause in interest rates. Techs were still very strong, but buying spread into other sectors and into world markets, and market breadth improved. Buyers also got hope from the CPI and PPI that showed a minor slowing of inflation, and stocks took off to the upside on Tuesday and Wednesday morning as they waited for the FOMC. The FOMC did hold rates at 5 to 5.25%. And that pause, not a surprise to us. We told you last week we thought it was coming, and the Fed wanted to help the Treasury refill its coffers, and they have to borrow between $500 and $1 trillion in debt coming pretty soon. And Powell did reference that finally in some question in the Q&A. And that's good that he did that. For the Fed, it was a hawkish pause, saying that rates probably were going to go up 2 more times. The terminal rate now has been raised up from 5.1% to 5.6%, and the dot plots have it as high as 6%. And the only one that really says to stop is Austin Goolsbee. He's a political activist that doesn't belong on the Fed. And he would do nothing that could possibly hurt this administration or their possibility for re-election. So I'm been very, very critical of him anyway. The commodity doom loop that I talked about when months ago there was some discussion about a Fed pivot. Of course, there is no pivot here, and the Fed even says that. They're just pausing. That then brings the potential for commodities to start to move up again. And that means that a Fed pause just simply brings a resurgence of inflation. Certainly any pullback in Fed rates, which is not happening, would bring a big uptick in commodities. Right now, we're seeing the foods actually start that as the grains take off to the upside. So that could be just a little bit of sign, but I do not believe that interest rates can come down, because I think that any sign of that, you're going to get commodity prices moving up and inflation surging again. Thursday, the markets moved up again as investors were thinking that the pause may be the end to interest rate increases, and the buying really has been intensifying. And it was a big up day again, and that was despite the European Central Bank raising by 0.25% and saying there is more to come, and their inflation rates are higher, and no real sign of that stopping there in Europe, especially also in the UK. Friday here, we had some early gains as traders are afraid the markets are going to go up again, but then the stock market turned mixed. And I'm recording this here early on Friday morning because I need to be out of here a little early today, going to a Corvette show. Our early analysis for the year for the stock market was that the S&P 500 would go up to 4,300 with resistance zone 4,300 to 4,360. And I said that zone would be tough to get through. Also, when the S&P 500 was around 4,200, I said that the stock market probably had 3 to 5% upside potential. The market clearly has proven to be much stronger than my projections. And Friday, the S&P 500 made a peak of 4,448, much higher than I thought it would get to. And this proves, as it has before, that our momentum algorithms do trump my gut feel. As what I do is I project up to resistance areas and put in the ideal cycle projections. And then if momentum is very strong or very weak, then that needs to be adjusted. And that's clearly what we've done here. And our MCM, Market Condition Monitor, has clearly shown that as the indexes have been from between bullish to very bullish and are very bullish right now still, which is going to prevent any real big downside. Still, cycle analysis gives very strong messaging, and I'll show you the new projections with an upgrade to the U.S. stock market in the period in the section where I do the stock market analysis, and I've got a lot more to show you there because we talked about European markets and the Dow Jones Transportation Average being a source for more rally, and we showed that some weeks ago. And while the index has made higher levels, and they do look incredibly strong, the Buffett indicator, which is market cap over GDP, is at 160%. And it was only higher one time. That was in this last bull market when the Fed was, and the government was printing huge amounts of money. And that 160% is much higher than we saw in 2000 or 2007. There is likely more upside to the market, as we're saying, but it's already at nosebleed valuations. With momentum very strong, as our indicators are showing, you really have to let them run as traders. We don't want it to get in the way of that. But for investors, the risk is clearly growing, and it could be very significant with, again, not a huge amount of upside available to this market because the Fed is not going to support that. And there's going to be some reversion to the mean down the road and also bear markets. So investors, if you're in the long term, you really have to think that, is this the time you want to be adding to positions? I don't think so. Stocks for the week, NASDAQ, S&P 500 up around 4%, a little bit more. Dow Jones up a couple percent, and they're also up only 1.5%. Clearly, the rotation that we're talking about happening has not begun yet. And we do think that that's going to be very important as we move into the higher highs during the summer, because I really believe that the NASDAQ is going to be the source of funds for these other indexes to be moving up and therefore underperform. Bond market slightly lower on the week, yield slightly higher. Gold market was down pretty good, but then when the dollar started to move sharply lower based on the realities of where the Fed is in this pause, then gold moved back up again. And gold's going to have a hard time now moving to the downside and probably has seen the worst levels, though we don't think that the big upside is coming till later in the year. And that's helped by this dollar weakness. Dollar down 1.2% for the week, and there is more to come. And now we're now targeting 100%, 100 on the index, possibly, that's the DXY, possibly by July. And again, we're looking for commodities to be firming up. You could even see that in lowly natural gas, which also had a big uptick this week. Oil was also down and then came back and has slight gains for the week. Again, subject to the movements in the dollar. And we do think, as we say, the dollar as negative is going to be a very big influence on the market. That is the opening, and lots more to show you here as we move forward. Please do go to our site, askSlim.com, and explore If you're new, get acquainted, and you can do that. We still have the free premium services preview. This is the last 3 days for you to sign up for that. You can just sign up in the middle of the front page at askSlim.com, and then you'll have free access to a tremendous amount of things all the way through the 23rd of June. On YouTube, subscribe to the channel, click the notification bell, and like this video. Give it a thumbs up. On Twitter, follow us at askSlim. And questions you may have about anything I show you, please write to Matt at askSlim.com. Trade planning with options. Katie combines her vast knowledge of options trading with the askSlim method, cycle analysis. This is absolutely fantastic. Watch this. Katie is just brilliant at this and really knows cycle analysis pretty much as well as anybody in the world. So Katie is great. We're just really glad to have her and proud very much of her work. So watch this.
Hi, this is Katie Anagnostos, and this is a Trade Planning with Options video on June 15th, 2023. Today we're going to look at a trade idea in XBI, which is the Spider Biotech ETF. First, we have our legal disclaimer. The options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. Momentum on the daily chart is indicated with the reversal scout and the slim ribbon, which colors the candles green, gray, or red, depending on the momentum conditions, and both momentum indicators are currently positive. For those of you who use our new market conditions monitor, it currently shows XBI as very bullish for the time frame that we're looking at. So what we're looking for is a move like this, perhaps a bit more downside into this minor cycle trough. And then another attempt to the upside up to this level, maybe if it wants to be very strong, even up to that intermediate cycle high. And then another move down into this support zone for that dominant cycle timing period. Now the levels that we're looking at that we would currently expect to hold, 95 up here on the top and 84 down here on the bottom. Now we're going to go over to the Tasty Trade platform and set up a trade idea. Tasty Trade is our preferred options trading platform. On the homepage of the askSlim website, you can hover over the Marketing Partners tab and click on Tasty Trade. That will take you to a page where you can learn more about Tasty Trade. And if you open an account with them through our link, that helps you with some special bonuses, and it also helps us. Now let's go take a look at Tasty Trade. So I have XBI loaded in here. Notice the IV rank is 12.8, relatively high compared to most of the other ETFs on our askSlim focus list. We're going to look at a short premium trade idea in the July monthly expiration cycle. So the trade that I'm going to demonstrate is a strangle, which is the sale of an out-of-the-money put and an out-of-the-money call. The levels that we were looking at were 95 on the upside. So let's go ahead and sell that call. And we were also looking at 84 on the downside. So let's go ahead and sell that put. Now, this is essentially an expected move strangle. If you look at this brown bar right here, this vertical brown bar on the Tasty Trade platform, that reflects the expected move. Now this strangle is slightly skewed to the upside. It does give us a few positive deltas and a daily theta of about $6.60. Our credit collected is $2.36 per strangle, so that is our max profit. Let's just lock this in really quick so the price doesn't move around. So as I said, $2.36 for the credit collected. That would be our max profit per strangle, $236. Now max loss is defined by 0 on the downside, and theoretically unlimited to the upside. Now the brokerage holds just shy of $1,300 in capital to place this trade. Our probability of profit is 65%. Let's go ahead and take a look at the risk graph. Here's the risk graph for the strangle in XBI. What you notice is this profit zone in green, and you want XBI to stay in between your short strikes and for time to just tick away. Also, a vol contraction would be beneficial. Now, if you have a small account size or you prefer to do a defined risk trade, you could also buy further out of the money options on each side to define your risk and create an iron condor. For example, if you purchase a call and a put $5 further out from your strikes, that would look like this. You'd be purchasing the 100 call and the 79 put. Your collection would drop to $1.50, so that would be your max profit per iron condor, $150. Your max loss is now $350. Probability of profit drops to 59%. Now, of course, you can make these spreads wider or narrower. Just remember that if you go wider than a $12 wide, you'd actually be using more capital than if you had just sold the strangle. That's our trade planning with options video for today. As always, please feel free to reach out on Discord or via email to katie@askSlim.com if you have any questions or feedback.
That is just great, Katie. It's just fantastic how you show that. And I really want to encourage people to go to our website and do open up a Tasty Trade account just by going to our marketing partners. And we get credit for that, and you get bonuses. And it's just a great, great way to get set up on a great site. And our Slim Ribbon is on there right now. So you'll be able to have our Slim Ribbon live on their charts. This is Future Speak. Arby is going to share a sample of our amazing show that's done only on Wednesday for members level 2, 3, and 4. He's going to bring you a Bitcoin follow-up, and if you sign up for the Popular Services preview, which there's only 3 more days to sign up, you will then be able to see this Future Speak in the coming week. So please do look at this and see the Bitcoin follow-up, which he gave a warning on as negative, and we've seen it move sharply to the downside.
If you go ahead and shift over to /BTC, you're seeing what is a weakening pattern here in Bitcoin. Okay, so we are clearly in an intermediate term corrective period in Bitcoin, a low that's due 7.3 to 8.7. Okay, so we are getting into this period of risk here where we're getting later in this dominant cycle on the weekly. And as we have highlighted here in Bitcoin, when you're late in these cycles, it has yielded sell-offs. And that's where we are right now, is we are getting later. So we are watching for this to get a move down, possibly sharply here in Bitcoin, into these levels, which on the weekly come in around 24,000 to 21,900 or so. That certainly looks in play here in /BTC. If we shift over to the daily chart. Now, as we said last week, it's important to see a close below 25,840. We haven't quite had that yet, okay? But in all likelihood, we're going to be watching for this rising phase to fail in this zone from 26,560 to 27,450 or so, and then look for it to turn down and then have the close below this old low at 25,840. If that happens, you're in a period of risk. And on the downside, we would be looking first for a move down to 24,276 to 23,000 even. And then we have one more level below that at 22,489. This low is due 7.3 to 7.17. So we are very interested in a short side bias here in Bitcoin. If we see a rally that fails in the zones that I mentioned, and then we see a close below 25,840 on a daily basis, okay, that is really very important to watch for here in Bitcoin.
Great work on that. Just as a reminder, why cryptocurrency is just under attack right now is that there were two lawsuits from the SEC, first Binance and then Coinbase. And then this last week, two South Korean firms, they shut down withdrawals. And there's, a lot of trouble coming for crypto in the future. We don't know how that's going to settle out, but I've warned that a vast majority of many of these cryptocurrencies are going to go bye-bye. As there's a big shakeout. And Bitcoin certainly looks like it's going to be a survivor, and there's even a question of whether or not that one happens to be a security versus other cryptocurrencies. So Bitcoin will survive, but probably going to be much lower first. Great work on that, RV. The askSlim Premium Services preview is here for only this next weekend. If you sign up during this weekend, you're going to get access through June 23rd. It includes everything that you see on these slides, and this is just no credit card required. You can sign up for this by going to the askSlim.com website. Right in the middle of the page by the player, you're going to see that sign up link only for this weekend. You'll get the whole next week of all of this amazing content, so please do. And then there is much more to this special because we're following it up. The askSlim Premium Services Preview Special offers. This is a very limited time. You're going to be able to buy the Level 2 membership for 2 months and get 1 month absolutely free. Then it's going to renew only month to month, or you can cancel at any time, and you get everything that you see on here, and that includes everything in Level 1. The Future Speak show, our live SIR grid, our SPX live chart streams, our whole video library, just so much that's in here, and all of those Level 1 services. Or you can choose Level 3, the same deal, buy 2 months worth and you get 1 month free. Everything in addition to what I showed you previously on that slide, you're going to get the Slimulator ranking systems, 84 best symbols with all of our directional bias, 3 to 6 week outlook, our trade ideas, our chart streams live, where you get our live charts on the SPY, QQQ, IWM, GLD, SLV, TLT, XLE with our proprietary charts and indicators. All of that streaming live all day long. You're going to get our cycle load timing tracker. Katie does just a brilliant job on that. Our trading hubs that has all of our analysis on there with our charts, videos, and key technical details. You'll be able to be on our Discord server and connect with our whole community and the askSlim analytical team. You get the MCM, which analyzes real-time shifting market conditions across multiple time frames, over 100 symbols with our proprietary studies, plus, as I said, everything in Level 2 and Level 1. Go to the top of the askSlim.com page and click Learn More, and then you will have the opportunity to see what's in there and sign up for these unbelievable deals. Level 2 and Level 3, buy 2 months, get a month free, cancel anytime, and then it only renews month to month. So this is just a great, great opportunity. So thanks for listening, and do sign up right now. All right, analysis on the stock market with our projections. Important information first. Please do read this slide. Just take a moment to do so because this is the important information about how our analysis works and how you engage with it. So important information right here. Stock market analysis. Well, we're going to look at the S&P 500, but I'm going to start out first by looking at the European stocks, and then we'll look at the Dow Jones Industrials, transports, and the S&P 500. The reason I've set it up this way is because it was just a couple of months ago that we talked about the European stocks and the Dow Jones Industrials, that they were going to be bottoming on a cycle that was out of phase with the S&P 500. And that happened just a couple of weeks ago. And they are now set up to continue to drive the indexes higher. We think that a lot of the source of buying is going to come out of the NASDAQ, as a lot of cash had gone into there, and we see that the institutions are very heavily weighted, are going to need to reset that as they sell off those 7 stocks that have driven the indexes up, and then likely because they're going to believe the bull market will continue, and so do we, that these other indexes are going to be driving it. I want you to see that analysis and learn from it. And of course, the stock market the S&P 500 got well past what we thought was the important resistance area. I referenced that early in the show if you're only watching the stock market clip, and it moved well beyond where we thought it would go, and that brings upside projections and upgrades for us. And upgrades always include upgrades to where the corrective levels are. So you're going to see that in here where higher projections are in the S&P 500 because the market certainly was much stronger than what we expected it would be. And our MCM, Market Condition Monitor, which if you do take any of our specials I offered earlier in the show, you'll be able to see that and get those indications on the market. Let's take a look here as we switch over now and look in the charts. This is FEZ, and this is just unbelievable, amazing cyclicality that we have in here. Really important for you to understand. What these dotted lines are where the actual lows are in the cycles, as you can see. And you can see where that hits relative to what are the ideal cycles on the bottom, right over there. And there's a dominant cycle right over here and a minor cycle. There are 3 minor cycles here that make up the whole harmonic family, as you see each of those. And you can see the absolute crazy, great cycle patterns in here. And when a cycle is positive, it's very likely that the next cycle would be positive and it will make higher highs. And you can see in here what it did was make a double top. And once it broke under this low, it set up this decline. And then you can see the failures and resistance for each of those minor cycles. I'm going to zoom in here and let you see the minor cycles, and you can get a good sense for what I'm talking about. These are the 3 minor cycles right over here in the dominant. Look at these perfect minor cycles as they rally, hit resistances, and then come down again. The breakdown over here, and it comes down over here into the fib target zone, right towards the 100% fib extension. You can see that right there. Then what happened was that once it moves above the 78.6%, it warns us of an important bottom being made. And you can see that. Now again, 3 minor cycles, 1, 2, and 3, each of them. Higher bottoms and higher highs. Just absolutely beautiful. What that means is that the cycle patterns in here can be projected to the upside, as you see right there. And for the FEZ, we are projecting an advance, just as we are for the rest of the markets out here into late summer or early fall, and either hitting these resistances here or these up over here. And so this says that if we're only 1-2 weeks into this whole harmonic family right there, what's the probability that this is going to turn lower? I mean, it's near zero. And what that says is that European markets are likely to go up for some significant period of time. And that is going to be a source for strength for the U.S. market also, which we are also projecting and have been for it to continue up into late summer to early fall. Let's just take a moment and look a little bit here at the back over here at the cycles. And again, so you can understand how these cycles have laid out right there. And you can see that the beautiful cyclicality and the very, very positive early advance right over here. And if you want to learn more about this, go to our cycle analysis workshop, askSlim.com workshops. There's a free video in there and tells you everything about what's in that workshop. So you can learn a lot about cycle analysis right there. As we share just some very basics of cycle analysis. And that workshop has got 24 modules. Took me 2 years to write and over 6 months to produce. It's just an amazing workshop. Nothing like it in the world. So if you want to learn this and learn the importance of all of the messaging and applying our very individualistic type analysis to the markets, then you can start learning right there. So that's a look at FEZ. Now I'm going to go through these other ones a little quicker because I don't need to do so much teaching during that. This is what we're looking at as as the Dow Jones Industrial Average. Crazy, you know, I mean, we were really looking at this cycle right over here, which is a 33-bar cycle for the FEZ, for the Dow, and look where it bottomed here and is moving up. The Dow only 2 weeks into this advance. You could see it's really very much the same thing that we just looked at in the FEZ. And we said in the beginning of the year, we thought that the Dow would be the one index that would make a new high for this bull market, and the other ones would lag. Well, everything has changed right now when you look at the tech stocks and how they have strengthened, and AI being the support for that. So now it doesn't show that the Dow is stronger any longer like it did in the beginning of the year, though it may regain strength. And I still think that with the rotation very likely coming into these later summer months, that the Dow will outperform the NASDAQ, and that could get it up to here to the all-time high. But right now we're projecting it to this dominant cycle peak and the 78.6%. That takes it 35,250 up to about 35,550 up there. So, you know, a good 1,000+ point gains on the Dow, we believe, out into the summer. That's a look at the Dow Jones Industrials. Now, we showed the Dow Jones Transports just about a few weeks ago and said it was forming this important base right over there. And this yellow zones are the corrective zones, and the green right over there is the start of the advances in those cycles, as you see here and here. And this is just the start of this advance. You see this big inverted head and shoulders. That could get much higher prices in here. Right now, we are projecting it only up to the 78.6%, which is around 16,875. Again, early in this advancing phase right over here. Again, we think that, you know, there's going to be a move into, you know, old economy stocks and commodity stocks and those type of things, cyclical stocks like the transportations are. And that would, again, be money coming out of the NASDAQ, but it doesn't mean that the NASDAQ is going to go down significantly. It just means that it will underperform. We think that rotation is coming, and you can see it beginning right in here. This is a very powerful pattern that we see in here, and were it to be able to get out above the neckline right in here, or the resistance line that you see coming right across there, that would be a good sign that it's going to just surge on the upside here. So transportation average looking absolutely great also, and that is another, you know, important sign that the stock market has plenty of time to go here on the upside. And of course, our market condition monitor is showing all of these things as being very strong. Now let's look at the S&P 500, SPX. And here is the SPX. Now, what we had looked at in the SPX, which is being driven up by these tech stocks, was that there was important resistance that was in the area of 4,300, like right over here, to 4,360, which was the bottom, this 78.6% fib extension. Of course, it went through there easily and has much more strength than we gave it credit for. And now getting up even past this minor 38.2% fib extension right there. So no matter what, you know, we put in here as important levels, it seems to not really matter because this upside momentum is so strong. I haven't referred to this in these other cycles, in these other charts, but you could see in here our momentum indicator, which is the reversal scout on the weekly chart, which is showing all of the strength that turned up right over here and then continued on the upside. And you could see here where it turns down is where you get into these periods of correction, these yellow zones right over here, here, and here. And that is due to come out sometime over here, sometime between August and October is where we think that declining phase will set in. Now, the peak could be in August, it could be in September. The later it is, the steeper the decline that it usually is. And right now, the projections have changed as we have upgraded in here. So let's just take a closer look right here. And you can see that what we're looking at now is that forget about our old resistances, because that's been disproven. And now what we're really pointing at is the likelihood of getting up in here. This is about 45.15 to that very major resistance at about 45.35. It's pretty likely that those levels will be made sometime out into that August-September period. Now, people will be looking at it and saying, well, we're almost already there already. Well, that's true. But at some point, it will stall and we'll get into this corrective period right in here. This cycle right in here is uncorrected. The later it stays up, the briefer the time is for the corrective period. You can see right in here on this minor cycle that what happened was it stayed up pretty late and only fell for 2 weeks there. And that's kind of what we think is going to happen right in here, a pullback. Right now, it points to that 23.6% at 4,300. Those supports are rising as the price rise in here. So we very mechanically change these. And for those people that prefer that I just say I'm wrong and that this doesn't work, well, we have proven that this is the best style of analysis there is year after year after year. So for those people that don't understand this, I really encourage you to go look at our workshop page and get some good sense of this style of analysis. The longer it holds up in here, it means that the timing translation is setting it up on the right side. The further on the right side of this cycle it is, the briefer the period for the decline. 4,300 is what we're looking for now as that gets upgraded, and then this move into the summer over 4,500. If it gets over this 45.35 number right over there, then the next numbers are way up at the all-time high, which I don't have in there. And I would say, based on the valuation situation, that is extremely unlikely. The Fed is not going to support these prices at 160% of GDP. The valuations are, as I said in the beginning of the show, at nosebleed levels, and that's going to begin to matter. So while traders, have to be very conscious of this upside momentum and not stand in the way of these moves, investors have to start looking at where the true valuations are and where these resistances are, and at what point they want to not add to positions and be considering actually lightening up on their risk. Again, we don't see any big downside potential until we get out here into the late summer and into fall, and the market should continue moving on the upside. Please do take advantage of the specials that we have out there, and especially to get the market condition monitor, because that will give you very, very good insight on the conditions of the markets for 4 different trading styles on more than 100 stocks and these indexes that we look at, plus commodity ETFs. So it's just absolutely great. You want to learn more about that, you can go to our website, go to the middle of the page. You can sign up for our final 3 days of the premium services preview. You get everything that is on here. Plus, look at the show earlier in the show and you'll see the specials that we have for level 2 and level 3, where you buy 2 months and you get 1 month for free. And then it is a month-to-month subscription, and you can cancel that at any time. So go to the top of the askSlim.com page and click the Learn More button, and you'll see everything that's included in there, and you'll be able to become an askSlim member and join our huge community and get the support from our great analysts for all of the markets using cycle analysis and our proprietary indicators. That's it for this show. Please do go to the askSlim.com and explore over there, get acquainted, and again, you can sign up for that PSP the last 3 days to see tons for free. On YouTube, subscribe to our channel, click the notification bell, and like this video. Give it a thumbs up. And watch member videos in our playlists and past shows. On Twitter, follow us at askSlim, and any questions that you may have, write to Slim at askSlim.com. I want you to be so unbelievably careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show.